This is called business continuation, so that you get cash flow coming in to continue to operate the business. Business had a fire, you had a warehouse, you lost inventory. There's things in that regard you're protecting.
When you need some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and more.
Hi, everybody. Welcome to Ask the Planman. I'm your host, Bruce Weinstein, and I believe everybody needs to be proactive and have a plan. We're working on getting our book out. The unofficial title is What's Your Plan, Man? Or the other title is The Power of the Plan. But it's all about planning. And I wanted to talk today. We're live on streaming here on Facebook and LinkedIn. And then this will be an episode for our Ask the Planman podcast to come out in the next couple of weeks. But I'm doing a lot of work locally with small business owners, and the constant conversation that I have is apprising them on 3 or 4 key areas for every business owner that they need to address and take care of. Now, some business owners may have a partner, some might just be an individual, but there's certain terms you may have heard depending on how far along you are in your businesses. And there's things that you need to do to protect yourself in that world. So the show is everything you want to know about insurance, finance, and more. And these are insurance and finance questions and topics or issues around the small business owner. If you're looking to become and start your own business, you want to pay attention to this. If you already have a business and you are not having these areas addressed, you need to stop, drop, and roll and take a look at that as soon as possible. So we're going to talk about key person, obviously used to be known as key man, key woman, but key person insurance has to do with the key person in a business. It could be a partner. It could be one of your top salespeople. If I'm the owner of a business, but I'm not in the sales because I'm running the business, and I've got 2 or 3 top salesmen that really drive all of the revenue for the business, well, what happens to them if they got sick, had an accident, and they're disabled? That revenue stream, that business that they were going out and generating for me and my company has all of a sudden hit the brakes. They need to get paid, and you might need to hire a replacement person or offload that work to somebody to make sure the revenue continues. So there's key man disability and there's key man life. Now that could be, again, 2 partners to make sure that the other one is taken care of. So one partner is sick and disabled, dealing with some issues, can't come in, is not working. They still have a salary to draw. I'm going to have that disability insurance available to them. Doesn't have to come out as an additional second source of revenue from the business. The business can then use that to hire somebody as a temp or fill in that void. So key person disability, and then key person life. If that person were to die, what happens? Do I have to replace them? So this kind of ties in with my second bullet point, is what's called buy-sell agreements. And so if I'm 50-50 partners with somebody, I'll use Adam and Mike are partners here in a business down in Delray, and they're 50-50 partners. And Adam's single and Mike is married. So God forbid something happen. Does Adam want to have Mike's widow suddenly now his new partner? Because she's inheriting his stake in the company. And so ideally, Adam would want to get control back of that 50% from Mike's estate. And so a buy-sell agreement is the legal document. And then usually you back it up with life insurance so that each partner has life insurance on the other, reasonably valued to the value of their stake and the value of the business. And then that money, that life insurance, is paid to the surviving partner in order to buy the shares from the widow in this case, right? So if you're not funding the life insurance component in your buy sell, how do you buy out your other partner without creating or having that liquidity? So most business owners will use life insurance. Life insurance is the instant liquid asset, right? If somebody dies, they're going to get a chunk of money. So you have the life insurance there for a nominal premium that you pay every year through the business. In most cases, you have it on each other. And then when, God forbid, something happens, it triggers the life insurance. You pull out the buy-sell agreement. You execute the transfer of the ownership from the widow to the surviving partner or partners, obviously if more than one. And you help to streamline that transaction so that the surviving partner can just go on and run the business, whether they seek out a new partner or not, that's up to them. But it usually is when the family, the spouse, the children to the other owner is not looking to be part of the business, right? It's just two people that started their business. They're not really thinking about succession plans and bringing their kids into the business yet. And then even if they did, they would want to have proper legal language. The buy-sell agreement is the legal documentation. And then the insurance goes into the program to fund and be able to provide that liquidity. Okay. So you have key person disability, you have key person life, and then you tie that in with your buy-sell agreements, which again, usually would be tied to the life insurance. But again, key person disability, if my partner didn't pass away and they're now permanently disabled, well, I need to have the ability to create that cash flow. And that's what disability insurance does. It replaces people's income. And then you again have that for each of the owners, each of your key people in there in that regard. Okay. And then when we're talking about disability, again, if I'm a sole practitioner, if I'm billable hours, if I'm the salesperson, whatever it is that I'm doing to create revenue for my business, if I can't pick up the phone, if I can't work, if I can't network, if I can't do my podcast, I can't generate new sales and revenue or keep my clients happy, my business is going to fall apart. So if I'm laid up in the hospital for surgery or a prolonged injury or something I can't come back from, well, where does that money come from and who's going to take care of that? So take care of me and take care of the business. So the disability insurance is such a key component here for any self-employed individual, a doctor, professional, truck driver, anybody who's self-employed. Like nobody provides you that coverage. You need to have something in that regard. Now, if you have a building, if you rent space or you own the building and you've got a mortgage or you have expenses to it, there's another type of disability insurance tied in that we will discuss with a small business owner is business continuation. And so, Allie, you're listening in on here, but you got touched by the hurricanes and the storms that have happened. They hit the Carolinas this time. They hit northern, western Florida. We got the wildfires out in California. All this stuff is impacting. So if I'm renting space, I have to pay my rent. My staff comes in. I have to pay for technology. I have to pay for the air conditioning and the electricity and the heat and everything that goes into operating that office space. And so now if the business is damaged or shut down, or I'm disabled, or the business itself gets disabled because of a natural disaster like the hurricane, well, the landlord still wants their rent, right? The Florida Power and Light, Public Service, Gas and Electric in New Jersey, Con Edison, whoever, like they still got to get paid. And so business continuation will provide the business owner a payment towards the lease and the triple net lease, the expenses that go into the business, running the business, and paying for the copier lease and the phone system and all these adjunct expenses that go into the operations of the business. Now, it's not on the individuals. That's separate disability, but this is called business continuation. so that you get cash flow coming in to continue to operate the business. Business had a fire, you had a warehouse, you lost inventory. There's things in that regard you're protecting. All right. So those are some of the key pieces here. And then as a small business owner, what about funding your retirement? So we're protecting the ability to earn your income. We're protecting the distribution of the shares if you lose a partner. We're talking about key person. We're talking about business continuation. But so now on the long end is, what am I doing if I want to have a retirement plan? So you could set up 401k plans. You can, work with your financial advisor and open up a plan, a simple 401k. If you're a small business, you could do SEPs. I don't even know what all the plans are still out there these days. That used to be when I first started. We had KIOs and profit sharing plans. And, they're all been very simplified now. SEPs are very popular. Simple 401k, simple IRA, Roth component. So all of those features there are vehicles you can set up to fund. You could put that in place for your employees to participate in. So they can be pretty dynamic. And then one of the things that I do in my world as well is using life insurance, overfunding life insurance, tying that in, creating a private pension for the business owner, for the self-employed. Remember, there are limits to what you can contribute to a retirement plan. So if somebody has excess capital, more than 30 or 50 grand a year that they want to put away that they don't need right now, and they'd like some structured tax planning. Well, overfunding life insurance creates a tax umbrella. It creates an umbrella that protects you from taxation. And then the way it's designed is we build it out to pull that money out later, 10, 20, 30 years from now that you've accumulated. It grows tax-free, it compounds, you continue to fund it, and then later on you pull it out tax-free. And I won't get into those mechanics, but we've done that. I hate to say it, for close to 40 years, we've been helping business owners fund private, tax-free income streams through their businesses, their cash flow, their income. And you don't have to be a business owner. You just have excess cash. Anybody can do that. So we've got key components here, 4 big takeaways. If you're just joining me on the show, we're talking about everything that a business owner needs to know, whether you're established or new in the business. We're going to be talking about this more frequently on the podcast when the book comes out. And so I want business owners to know not to ignore these things, to speak to their advisors. Give us a call at 844-PLANMAN. You want to reach out to me, Bruce at asktheplanman.com. You can email me or call me at 844-PLANMAN. But you want to make sure you have your key person in place, your buy-sell agreements, your business continuation, and then your retirement plan strategy. So those key pieces there. And then obviously, if you're going to do exit planning, we've got shows we've already spoken on, full episodes on exit planning and distribution there, and working with B2B CFO type people, helping your business properly get structured and placed for sale to maximize your dollars as you're building out your business. If it makes sense, you need to know all these obstacles that are out there and take advantage of that. So hit me up. Please like, share. If you're a business owner, let me know what you liked about today's episode. Let me know if we can help you. If you're thinking about getting into business, this is a short checklist of things you want to make sure you address. Certainly, if you're going to have partners, that buy-sell agreement, any partnership, you got to have some kind of partnership form. Think of it basically as a prenup, folks. If you don't have a buy-sell agreement and you have a partner, you're asking for trouble should things, and as I always say, all things end badly, otherwise they wouldn't end. And so you need to think at the end game, if the business doesn't work out, or if it works out, who has control? Who decides it's time to sell? Who gets that winning vote? If it's 50-50, it's always going to be a draw if you're not on the same page. So who gets 50.1 versus 49.9? That's part of the conversation too. Who's the ultimate decision maker? Who's the tiebreaker? So all of this stuff needs to be mapped out. You can do that with your buy-sell agreements, your so-called prenups. So until next time, folks, if you need some advice, always get it right. Come ask the Plan Man. We'll see you next time.